Hello guys, so welcome back to our trading channel. It's been like a month since we updated any video on this channel, and I know it's been a while, but it's been like somehow crazy. I mean, the trading has been like somehow crazy the whole of this month. Yeah, so this is a BTC USD trade, in which also this I never executed any trade. Like, I just watched it play out. So I had taken a break. So this video is more basically of educational video, yeah, on what you need to look for when using this Alchemist strategy. It's Alchemist blended with ICT 2022 concepts and the Malaysian support and resistance MSNR. Yeah, so basically it's more of a mixture of strategies. So yeah, so basically I was watching this thread, but I never executed anything, just left it the way it was, watched it. Yeah. And I think it was a trade worth it, and it's more clear, and it's good for education, like for learning. You get what I mean? So generally, if it will be your first time seeing this video, or like the first time you've seen this video on my channel, I've got some other 8 videos down there, but you can go take a look at them. But if it will be your first time seeing this video, the strategy we are learning is Alchemist with ICT and MSNR's Malaysian support and resistance. And basically, the video is not for, I can't say it can be, but it's not basically recommendable for beginners. I mean, because what I'll be talking about is some advanced and insights about this. Like, I'm into a real strategy. You get to know the basics anymore. Like the basics of lot size, leverage. You get that. Those basics you can go take a look at. You can go take a look on those at pepepips.com. And also, this strategy is for more, like, we can say, an intermediate trader, maybe, with a little bit of experience. In a trader who has fully captured, he knows what an order block is, a fair lookup is. Get that? When I say liquidity, higher lows. When I say rejection block, you get that? Just basically it revolves around, yeah. So I think it's average learning trader, or maybe you are a trader, you already got mastered you at the basic ones, and you are in search of a strategy. You can watch it here, and maybe you can go expand on other channels. There is another channel there's a guy by the name Collins the Liquidator. You can go search it down there. You can get it. It's just like, it's diverse, and you can get this trading strategy everywhere on YouTube. Yeah, basically. So yeah, you can go searching for it, and I recommend it. So basically, as I said, it revolves around order blocks, rejection blocks, liquidity, eyes. Yeah, simply just like the ICT, it's ICT, Malaysian support and resistance. I mean, it was Malaysian support and resistance, then I blended it with ICT. So like, and it's basically, let's say, Alchemist. So basically, this trading strategy is more about you having a POI. POI means point of interest. That's the first thing you are looking for. Then after the POI, you look for a CE, confirmation entry. So confirmation entry is basically what confirms, like, it's a confluence that when you see this confluence, you are now ready to enter. But you can't enter like just like that. You look for an entry. You get that? So you go from a POI. Next step is a CE, and the next is a entry. There is CE confirmation entry. So it means you are already confirmed that if you are on a bullish move, it's already confirmed that it's bullish. So what we are looking for is now confirmation entry. What will confirm for you, like CE, CE is like, it's telling you you are looking for a bullish, so it bullish uptrend because of your point of interest POI. So your POI has been mitigated, and now that CE, if you get that CE, it tells you that it's already like you're already on the right path, like you are going bullish. So that's the meaning of confirmation, just to confirm for you. Entry, confirmation, entry, just to confirm your entry. You get that? Then after that, you come now and look for an entry, like a place you can enter for, like, maybe to mitigate the drawdown issues. You get that? And maybe a sniper entry, something like that. Yeah. So mainly our POI is the 4-hour time frame, our CE is the 15-minute time frame, and our entry is the 1-hour time frame. So basically 4-hour, you come to 15 minutes and 1 hour. That's when you get a CE. But there is two types of entries. There is the aggressive one, which you basically look for 4 hour. You just do 4 hour and then the 1 hour order block. So I'm sorry for that. I'll explain later how we go like that. So basically, yeah. So the first thing is our POI, which is POI is a 4-hour order block or a rejection block. But mostly I prefer, all of you knows what's an order block. An order block is a last down close or up close candle in the in like, what can we call, like, if you are in a uptrend or you are bullish, the last down close candle will be your order block. And we have bearish, if you are bearish, your last up close candle will be your order block. And an order block, first thing, for an order block to be valid, it must be engulfed. And you know what's an engulfed candlestick? An engulfed candlestick is a candlestick like this one. You see this candlestick, this 4-hour, and this one, this candle, this bullish one, and this bearish one. So an engulf is when the candlestick opens and closes, like the bearish candlestick opens and closes, then the next candle, which is a bullish candle, opens and closes above it. That's the meaning of engulfing. Engulfing simply means like covering it, in simple terms. So that's our first order block, which is an engulf. The second POI is the rejection block, which I use it most of the times. Like, it's just a basic. It's more of like using rejection block reduces your number, the number of trades will take into the possible minimum, and reduces the drawdown effect and everything. You get that? So basically, I know most of the people don't know what a rejection block is. Rejection block is basically like this one, these two candles. The first candle formed, closed, then left a wick. Then the second candle closed like almost at the same point, or either it's open and closed above, or it opened and closed below, but the both four candles left a wick down there. So like, you know what a wick is. A wick is like that line with no body. Yeah, so that's the rejection block. And yeah, so that's what I use basically. So after getting my rejection block, I'll mark it with this trend line, mark it like that, then wait for it to be mitigated. So mitigation simply means like the rejection block was formed, then you wait for another retracement of the candle to that point of your rejection block, which will have used this marker. You get that? Yeah. So like up to that point, that's our POI. So after mitigation, you go to the, if you want to go through the CE method, you go to the 1 hour, like 15 minutes time frame. Let's take a look at it. Beautiful vision. So, you see that? So if you want to go to like, so this was our rejection block where it was. So if you want to go the CE way, you'll have to look for a double. You go for a line chart, you go to the line chart with the, so here, this area, like this, yeah. So there was our wick which tapped onto our POI. Then you look for a double break of structure, which will be like this. That will be our first, and that will be our second double break of structure, specifically on line chart. Then you come back to candlesticks, you see, then you go to the 1 hour, and basically just, yeah. So you go to 1 hour, then you look for order block. You get that? You look for another block. So yeah, could be like around here, if I'm not wrong. So it's here. And it's here. Here it is. So the block will be here, right here. You see this. Right there. So the first thing, as I told you, order block must be engulfed. You get that? So that's why we get our first break of structure down here. Then the second one, online chart obviously there. Then this is the order block which was formed and must be engulfed so you can get your entry. So that's why it was engulfed by this candle here. That candle there. Yeah, this candle like here. This a close candle. Then came back. Immediately it came back to here, and then boom, you bought. So basically that's it. I mean, and your stop loss depends. Mostly is the stop loss is usually like, if the order block is such a big deal, you can drop to 15 minutes or 30 minutes. Basically 30 minutes or 15 minutes. You see. So like basically 15 or 30. So if you drop to that, it will be and you select that it's a direct entry. So maybe yeah. So that's it. That's the first thing where you can enter. Then the second one is with no CE, the aggressive method. So basically the aggressive method is that you just take a look like here, this setup here. You just look for a mitigation on your rejection block, and mostly it basically happens when there is a liquidity, right? Like there's a liquidity pool somewhere. So that's basically when you want to enter on an aggressive entry. You look for liquidity, then it must have a order block and rejection block basically. Then you just place your entry on the rejection block and wait for your 1 hour. I'm sure on the 1 hour there will be an order block, or on the 15 minutes, because that's how it usually works. So you see 1 hour no order block, then you drop to 15 minutes, 30, it's not a block. Then you come to 15 minutes, which I don't usually advise for an aggressive entry. It's kinda tricky. So yeah, it's the 15-minute order block. But for the aggressive entries, I usually encourage for you, if you want to enter on an aggressive entry, just look for 4-hour time frame, and make sure on your 1 hour you mark your rejection block, and make sure on that 4 rejection block there must be a 1 hour order block. That's the only way it can guarantee your aggressive entry to be more efficient. You get that? Yeah. So that's basically the main frame of it. It's about from 1 hour, 4 hour, 10, 15 minutes, then 1 hour. Then you just check on what's aggressive, or you look for the confluence, the confirmation entry. So it's up to you, but for now I basically advise you do the CE method. So like, let's take a look at this. Maybe this one here, this rejection block here, 4 hour, then we drop to the 1 hour. And you see that? So basically you see now here, this is your 1 hour order block here. Which is already engulfed with your 4 hour. With that range, there is also the 4 hour rejection block. So that's why I said I don't advise mostly on the aggressive entry scores. You can see like here, you see that stop loss, so it means your stop loss will be down here, the down of the order block, and that's massive, man. So massive. If you have a small account, I don't think it can survive it. So basically just look for a CE, and CE, after you get a CE, you can now narrow down up to 15-minute time frame if you have a CE mostly. Yeah, so that's basically the general concept about this trading. Like, it's about this strategy. It's 4 hour, 15 minutes, 1 hour. You switch from candlestick to line chart, and it's so in general, just to generalize it as we end the video, it's from 4 hour, which is where you look for your point of interest, then you come to a 15 minute on a line chart. Note that 15 minutes is on a line chart, and the line chart is basically for your confirmation entry, and your confirmation entry is a double break of structure on a line chart. So it's like double 1 2 on a line chart. When you see to the candlestick, you won't even see those double break of structures, so that's why. And then you go back to the 1 hour. Yeah, it's just as simple as that. So, and this might be our last video for this strategy before I'll now have to restart about a general forex, like from the beginning, from on a beginner friendly way till we go to this strategy. So like from the bottom to top there, like till here we are now. So maybe I'll be dropping videos bi-weekly somehow. Yeah, so yeah, hope you'll enjoy it. Don't forget to like, share, subscribe, man. And we'll start going live because we unlocked our 50 subscribers on date 7. It was a success, man. Like date 7, and here on date 8 we are at over 80 subscribers. It's a milestone.